we also spoke about co-founder agreements. But my worry is that how much do these agreements really hold?
I've been a lawyer for 21 years now. I haven't seen a co-founder departure being as smooth as saying, hey, you know what? You did this as per the agreement. Now I have all your shares. Give me your shares. Tata, bye bye. But what an agreement helps with is at least.
How's your journey been like? Like, how did LexStart happen? Why law?
My older sister was studying to be a lawyer. Unfortunately, when she was in her final year, she passed away. And I don't know,
so
one fine
sorry.
day I woke up and I was like, I'm going to do law. I'm going to go to the same college she went to.
Wow. And how does this whole ESOPs things works? Because I feel it's very complicated and misunderstood.
Today, it's not just ESOP. So you have ESOPs, you have ASOPs, you have MSOPs.
Okay.
We lawyers like to complicate things. Otherwise, how will we remain relevant?
Like you mentioned a few clauses in a shareholders agreement. A lot of times founders just don't want to read these documents. So 2-3 clauses which are super important but often overlooked.
My fellow lawyers will hate me for this answer.
I have like a very important question for you.
Okay.
To fundraise or not to fundraise?
Yikes.
Welcome to the Blue Carpet Talks, where we shift the spotlight from glam to grit, one real story at a time. I'm Jaey, the founder of Jaey, India's first size-inclusive power dressing brand for ambitious women. And through this podcast, we're not just dressing women for the job they want. We're also unpacking what it really takes to build, lead, and grow in today's world. Now, today's guest is someone I've been wanting to bring on for a while. Because behind every flashy pitch deck, and we've just raised a round post, there's paperwork, there's panic, and let's be honest, plenty of things no one wants founders about. Today's guest sits at the intersection of law, startups, and some serious founder real talk. She's the person hundreds of entrepreneurs call before signing a term sheet or after they've signed the wrong one. But beyond the legal lens, she is also an angel investor, a mentor, and someone who's seen what actually breaks or builds startup behind the scenes. Hi Anisha, welcome to the Blue Carpet Talks. I'm so excited to have you here. So enough about the titles. I want to know from you, who is Anisha Patnaik?
That's a very loaded question, but I would say Anisha Patnaik is an eternal optimist and a fighter.
Wow. Okay.
So I mean, I might sound cliched, but that's who I am. Always been the one who's very, very conscious and like anxious about everything that can go wrong. Okay. But I'm like, what if if it turns out to be right?
Wow.
Right. So hence, that's who I am.
Amazing. And you don't come out as conscious or anxious to me at all, because when I reached out to you for the podcast, you were just so easygoing, and that's what we love with guests. So I'm not sure how much this hour really costs because that's a lawyer that we've brought in here for more than an hour. But thank you so much for doing this. And by the way, I love what you're wearing. I love how this outfit looks on you. So if you could just tell us, how do you feel in it?
Really like a boss lady, let me put it that way. I love the outfit, love the color, and kind of also went outside of my comfort zone on multiple things, right? A, the podcast itself, but B, I'm a lawyer, right?
Yeah.
So it's always about black, white, and gray for us.
Yeah.
So went outside my comfort zone, but I'm loving it.
Amazing. That is so nice to hear. And Jaey is exactly about that. Experimenting, trying new things, but at the same time being the most comfortable in whatever you're wearing and feeling the energy in it. So I love that we're doing that with you. So quickly, just starting with your journey, you've said that you're an optimist and a forever fighter. So how's your journey been like? Like, how did LexStart happen? Why law?
Oh, why law was a very emotional decision. Okay. I was always, like the studious one in the family. Mm-hmm. So this is about 15 years back. Okay. Back then, the options were engineer or doctor, effectively, right? Like, so doctor, I did kind of, I was optimist about that too. But
Okay.
once I walked into a OT, saw so much blood, and I was like, oh my God, I can't do this.
Yeah, it's not for everybody.
Yeah. So then, 15 years back, being a software engineer was the cool thing. So, I was actually prepping for, IITG.
Okay.
But at that point of time, my older sister, was studying to be a lawyer.
Okay.
But in my head, and no offense to anyone, but in my head, I was like, whoever doesn't get admission anywhere studies law.
Oh my God.
Like I was so so arrogant and all of it about it. I was like, I won't do law. Law is for like,
Yeah.
if you don't get admission anywhere, you won't do. But unfortunately, when she was in her final year, she passed away.
Oh.
And I don't
I'm
know,
so
one fine
sorry.
day I woke up and I was like, I'm going to do law. I'm going to go to the same college she went to.
Wow.
Like it was just an emotional outburst. I was in
Yeah.
12th standard at that time, and it was just this thing. And my father actually didn't fight it. He said, are you sure? I was like, yeah. He's like, theek hai, karo.
Wow.
So hence law. LexStart also was a very emotional decision, but
Okay.
slightly, coming from a point where, if you look back, 15, 16, not 15, sorry, about 10, 11 years back, startups were just kind of coming up
Yeah.
and all. There were very few startups that had actually made it big. And at that point of time, I was, so my entire career before that, I was working in a large law firm doing multinational M&A and JV deals.
Okay.
So, after that, I got this opportunity to work with Acumen Fund, which is
Okay.
a impact
Okay.
VC. When I started working with Acumen is when I actually started interacting with entrepreneurs. Till then, I had no clue. I was working on these large deals and everything was so hunky-dory, right? When I started working with entrepreneurs, and as a general counsel for the fund, we would do due diligence, etc. And you'll like have a laundry list. I'm sure you've gone through it.
Yes.
A laundry list of issues, and you would tell the founder that, listen, you got to finish all of this. Only then we are going to invest.
Invest.
I used to have these founders call me up and be like, Anisha, time is money, right? I mean, this is going to take us 3-4 months. Can't
So
we
much
do
data,
something?
so many compliances.
And I need money in bank as of yesterday for that,
Yeah.
correct? And that's when I realized that it's not like they were not hiring consultants, etc. But this whole VC world was so new that they didn't have the right consultant.
Yeah.
And larger law firms at that point of time were not working with startups.
Yes.
Economics didn't make sense.
Right.
So I noticed that gap, and I felt very strongly about it because these were founders from Harvard, Booth, etc. Right? So really smart people, and impact means really smart people who've kind of left the comfort of AC rooms and gone and like doing something in some village in Bihar, all of that, right? So I was like, someone has to help them. I was like, I'm going to help them.
Wow.
But I didn't know how. So first I actually went and approached law firms saying, I'll start this practice. Everybody was like, no, doesn't make sense. Then I was like, okay, being a lawyer, I was like, I'll write a book about compliance. Some of my friends very politely put across saying, listen, nobody's going to read a book. Like, hello. It's not that interesting. And that is when someone said, why don't you make an app?
Okay.
I said, okay, that sounds interesting. Let me figure out. Then, that is when I started kind of working on that idea. And that's how LexStart happened. LexStart was actually the first, one of the first, I would say, not the first, one of the first, there's a lawyer in me correcting myself, one of the first legal tech startups in the country.
Okay.
Back then, legal tech was not even a term. I
Wow.
remember me trying to explain to people that I'm building a app and a website that will help with compliance, and everybody was like, what is that? So that's how LexStart happened. When I started it, people said it's a career suicide. That was the word. But I was like, theek hai, what is the worst? It'll not work out?
Yeah.
Then I'll go back and get a job again, right? What's the worst?
Yeah.
But I was like, if I'm so passionate about it, and by the way, I sat on it for 2 years before I took
Wow.
the plunge.
Okay.
Because I had to pay rent end of the day. I was like, don't have that much money, not loaded even from family front. I was like, I need the cash. So I actually sat on it for 2 years, but I reached a point in life where I literally would come back home miserable every day. And I'm someone who likes to tap dance to work. So if I was that miserable, I was like, nay,
If you're not enjoying what you're doing.
what's the point?
Yeah. Very interesting, Anisha, how you started all of it. I think your why law journey definitely gave me shivers because such a personal connect to it and actually doing something big in it. And I think when you started LexStart, obviously the world has to say no to something very courageous that you're doing. But looking back, I think you were ahead of your time for most people because back then, like you said, there were barely any startups, right? And they were struggling. Today, there are tons of startups struggling. It's not like startups have grown, but this problem has not been solved. And I come with a personal experience because I was raising around a few months ago and I had to do all of this. I had to search for like lawyers to get me a basic agreement. Agreements in itself are so complicated. And to get somebody to do it for me and then the quotes, and if you're a bootstrapped early startup, you can't spend 2 lakhs on an agreement. It just doesn't make sense. So to have somebody to actually do it in a very easy, simpler way and solve it for us, for me, it was a personal, very big comfort, I'd say. And I think you're solving an amazing problem. And being the partner at LexStart now, I think you've supported more than 750 startups till date, or more than that?
More than that easily.
Wow. So, it's a very different question, but do you think you've reached that level of success that you wanted to? And like, what does success mean to you?
No, I don't think I have reached that level of success. I hope I
Fighter
never
in you
think
speaks.
that. I hope I never think I've reached, because then I wouldn't know what to work towards, right? What success means for me is to be able to build an institution. So if you see, and again, no offense to them, but a lot of firms have personal names. Like I keep telling my team this. There's a reason I didn't call it Patnaik and Associates. I called it LexStart because I want it to be beyond me. So I actually don't feel proud of the fact if a client has to reach out to me because they think I'm the only one at LexStart. They should reach out to me if they want to talk, right? That's why I set it up for founders to be able to reach out to me. But I feel very upset if it's all about me. So success for me is to reach a point where I have been able to build an institution where when people talk about LexStart, it is about the team and not about Anisha.
It is so accessible that people don't have to reach to you to actually reach to them.
So for me, the day I built that institution, which is beyond Anisha, I would think.
Wow, amazing. So, what would, if Anisha of 2025 met Anisha when she was starting LexStart, what would you say to her and what would she tell you?
Now, incidentally, this is our 10th year, right?
Wow,
July is
congratulations.
Thank you. So what would Anisha of today say Anisha of 2015? I think something that Anisha of 2015 knew, which is why she started LexStart, but great idea, babe.
Wow.
Don't doubt yourself. I mean, this was a good call. Anisha of 2015 would say to Anisha of 2025 that, babe, it's not going to get easier. You think when you have a team of 30, 40, 50, 100 lawyers, it will get better? Nah.
It only gets worse. It only gets worse.
So don't think, 5 years later, maybe it will be easier. It only gets worse.
It never gets better. It genuinely never gets better. I think the problems change. But the quantum of problems doesn't.
And in fact, just yesterday I was chatting with an entrepreneur about it, saying we started up because we wanted, of course, we were passionate about the idea, but it was also being our own boss, right? That sounded very kind of fascinating and exciting. But boss,
nowhere close.
You're not your own boss now. Now you're a slave, because when you were an employee at any point of time, you could simply say, I'm burnt out, I'll get out.
Yeah.
Today you can't.
You can't do that. And
You're
there are so many
responsible for
people.
your, like,
Yeah.
so many people relying on you.
Yeah.
So you actually don't get the independence you thought
Yeah.
you kind of
Yeah.
wanted.
Interesting. So, in this entire journey, has there ever been a point where you felt like everything is falling apart and maybe you will not be able to do it, and then this actually became your push to make it happen?
Every day.
Wow.
Every day. So I feel like, I don't know if you've watched this, I don't watch too many movies, but there's this movie called Jab We Met,
Of course.
where
Yeah.
Kareena at one point says, Rabba, aaj aur koi problems nahi chahiye. I feel that every single day. By the time it's like 1, 2 p.m., I'm like, hey, Prabhu, no more. Please make it easy now.
Oh, boss.
Done for the day types. So I think, yeah, it's almost every day. And as women, I'll be very candid, we need to talk about it. When it's that time of the month, I think it's even worse.
It
Like,
was.
I think I'm like, every month I'm like, I'll shut down. I can't do this anymore, right?
Yeah, and it's also 3 days before our period, 3
Yeah,
days after
yeah,
our period. It's
yeah,
not just even that period phase.
Yeah. So, and post 40, it's like 20 days of the month,
Yeah.
I'm telling
Oh my
you. Okay.
God.
So, and I've never talked openly about it, but I think we should talk openly about it, because
Yeah.
people need to understand.
For
But
sure.
yeah, it's not that easy. Mistakes happen, and when you're in service industry, right? See, products, you can have quality checks, all of that done before your product goes out to the market. At least you have that control.
Yeah.
In service, you have every lawyer dealing with a client.
Yeah. There's always a human involved.
Yeah. So then what happens is errors do happen,
yeah.
and who's neck on the line?
Of course. And
So,
we
yeah.
have to take that responsibility. So, very interesting, I think, because there are so many levels of problems now we are talking about. Being a founder in itself is a big problem. Not a problem, but it's like a firefighting every day. Plus, being a woman. So, you have your days that you just can't do it. Plus, being in a service industry where you're always facing the client. So, I think that the sheer number of problems that we face every day is just humongous.
Yeah.
And going through all of that for 10 years and still building something so incredible, I think kudos to you. And again, the fighter in you. I just loved when you said that you're an optimist and a fighter. I think perfect combination. So kudos to you for that. Let's just probably jump into exactly what LexStart's doing, the kind of problems that LexStart solves, and the kind of problems that founders actually face. So, what are those common mistakes that first time founders always make, and how does LexStart play a role in that?
Oh, not just first time founders, I think, and also I speak for myself as well, right? We as founders, there are constantly some things that we come across, or, I wouldn't say mistake, but human element here is when we enter into any partnerships. So it could be a co-founder,
Yeah.
it could be an influencer
Yeah.
for you, right? It could be anyone. So any partnerships that we enter into, for us it's more about trust. For us it's about what we discuss and agree to.
Yes.
So we kind of try and, for lack of a better word, trivialize the need for a document.
Right.
It's almost like saying, hey, you and I have
Trust
agreed
you.
to something.
Yeah.
Chalega. What's the
Kya hi
worst?
zarurat hai,
Yeah,
haan.
exactly. And the thing is that, and this, my mentor and my first boss had told me that, contracts are for when you're again, a very crude example, but you don't enter into a marriage thinking of a divorce.
Yeah.
But if, God forbid, you have to go through it, you better have things sorted.
Yeah.
That's what it is.
Yeah.
You're not walking into the partnership thinking it'll break. But when it breaks and you don't have a document, you're the one who's going to get affected. And I think this throughout, if you look at a journey of a startup, right from the time they bring a co-founder, website developer, right from there to when they bring in angel investors or VCs, to when they bring in influencers, partners, all of that. Don't ever trivialize the need for a document, because that will come to haunt you in case. Even if you think it's a 0.0001% chance of the relationship not working out. But if you don't have a document, you will end up paying badly for it. Not just money wise, also it's a emotional strain, right? If your co-founder walks away, think of the thing. So I think that is the biggest one. I mean, the list is endless. Like, I can keep talking about something that everybody talks about, compliance, all of that. But I think everybody understands that. This, I feel, is the core of your company.
But Anisha, what happens is that when you are an early founder, there are like tons of things that you have to do. And that again comes from a personal space. Like, I get the importance of an agreement because it's not just, it's not mistrust, it's just protecting the future that you don't know what's going to happen. But then I'm doing like million other things. And then documents are not easy, right? To get the entire document, all the clauses right. You don't know, the point is that you don't know where you're going wrong in a document, what is missing, what should be better. And you can't have lawyers doing it for you from day one. So while I understand it is very important, it is a very big complication. So is there an easy way to do this?
ChatGPT.
Oh, now it is.
The number of people, like any event or social gathering I go, I walk away with at least one person telling me, "Arey, now to I do contracts on ChatGPT." I'm like, great. Although, and no, again, no offense to ChatGPT, but see, today actually what has happened, not great for our business per se, but the fact is what has happened is that there are a lot of smaller law firms, boutique law firms that have come up. So, actually speaking, client or the companies are at an advantage because lawyers are undercutting each other. So, 10 years back, you didn't have an option. Today, I feel you have an option, and a lot of people. So, I'll tell you, even for me, it had always been from day one. The ethos had been growing with the startup, right? So, I don't want to make money out of one deal.
Yeah.
I want to be able to grow with you.
Yeah. Keep working with them again and again across their stages.
Yeah. Which is like initially I used to kid, we are like the Robin Hood, right? We will kind of ensure that we meet everybody to the extent possible. There are times when we can't also.
Yeah, for sure.
But we are able to meet budgetary requirements. And I personally have faced this, that one of these clients with whom we grew, we reached a stage where the client told me, "Anisha, yaar, आप बहुत कम quote करते हो."
Wow.
This was the same person who had said, "Yaar, Anisha, I can't pay you so much."
Oh, wow.
But that is what we kind of work for.
For sure.
So you got to just find, and I'm not saying LexStart is the only one today. There are quite a few. So you got to find the right partner. Just like investors are taking a bet on you, your partners also need to take a bet
on you, for sure. So you mentioned about ChatGPT and about how smaller law firms are taking advantage of it. So as a lawyer who's been in this space now, how do you think AI is changing things for you in a good or a bad way, whatever, and how will you use it to your benefit?
So, when I said we started as a legal tech, back then, of course, AI was not that sophisticated, but AI was there, right? Machine learning, basically. So, 10 years back is when I bet my career, my savings, everything on building something.
Wow.
Integrating
Ahead of your
machine.
time.
Yeah. But so, I think for lawyers, and it has started, people have started embracing it. We have to use it to our advantage. So AI is like, I wouldn't look at ChatGPT as my competition. ChatGPT is my partner. I need to collaborate with it and use it to my advantage to be able to provide better quality services and reduce the cost so that I can pass on that cost benefit to my client.
Perfect. Because then it also reduces the time that you need to make those documents with their help. Very interesting. So we spoke about the different problems that startups face in the early stages. So can you name 3 to 5 key compliances that startups usually miss out in their early stages?
I think when fundraising, That's like the biggest issue.
For sure.
If you don't do allotment, so there are ton of things or rules when you're fundraising, right? Like, for example, if you follow a certain process, you can't use the money till you haven't allotted shares. A lot of people don't know that.
Yeah.
They end up doing it. You got to do a bunch of filings before you
Yes.
actually accept money
Right.
for that.
There's so many of them,
yeah,
and then
yeah,
you need
that's one.
approvals from the government, and they don't give the
Give the
approval.
approval. So gotta be careful. You can't take money from just about anyone. Like you
Yeah.
can't take loans from just like, you know, you take loan from your family, chalega if you're a director, correct?
Yeah.
But problem in India is that I I even call my second cousin my
Family.
sister, sibling,
Huh.
right?
Yeah.
But law does not recognize that.
Exactly.
So startups, founders, we keep kind of taking loans when we can't. So that's there. Convertible note, I mean that itself is a different animal by itself. We'll need another 1 hour for it.
Oh my
But
God.
these are some of those very, very obvious issues that almost in every diligence that we do, we will find.
Wow. Okay. Interesting. So you mentioned convertible note. So just adding on to that, what is the easiest instrument to have your first fundraise? Simple.
Easiest would be convertible note. But what also happens is in your first fundraise, you typically are also accepting 5 lakhs, 10 lakhs, all of that. So convertible note doesn't work.
Right.
So hence
I think there's some 20, 25
25 lakhs, yeah. But also there you could again go to a angel list, start a RUV, right? Which is basically, it's almost like a founder starting a fund, sub fund.
Okay.
Put in all these 5, 10 lakh checks in that.
One vehicle.
One vehicle, and that becomes a name on your cap table. So there is that workaround. But if that's not an option, because if you're raising very small amount, even angel list won't be interested, then simply go with the tried and tested method of CCPS, compulsorily convertible preferred stock, preference shares. No, CCD, all of those are nice, fancy, but the thing is, also the approach has to be this. When we are fundraising, everybody is like, what is the instrument for me to get the money in fastest? But my point is, paisa to aa jayega, but when you have to later on convert it, if you're again spending more money, if there are problems, then let's not be penny wise pound foolish. If it takes you another 1 week, might as well do a structure that's most optimal, not now but also in the future. And which is why I tell founders, एक हफ्ता ज़्यादा लगेगा, चलेगा, 5 working days, CCPS.
But then CCD में ये भी है ना, I think the another benefit is that you don't have to worry about the valuation for now, the dilution for now. That's for later. So you set a later floor cap, whatever it is, and you decide. So maybe early founders take that to their benefit, but I was struggling with that also.
Yeah, so see, and if you had asked me this question last year or till earlier this year, I would have said CCD is fine. But the thing is, to my point, when you're converting it, no, it has become more complex
Complicated.
now, right? So even if there's 1 rupee left, you're supposed to return it, which is why. But this whole thing, floor cap, all of that, you can still do with CCPS.
CCPS also.
So my point is, CCD karo abhi, pay your lawyer now. When you have to convert, you again have to pay your lawyer.
Yeah.
Great for my business.
Yeah, but not for
Doesn't
the
make
startup.
sense. CCPS.
Interesting. So, since we brought up the point about fundraising, I have like a very important question for you.
Okay.
To fundraise or not to fundraise?
Yikes. I bootstrapped my legal tech startup for 5 years.
Yeah.
They both have their pros and cons, correct? What fundraising gives you also is that additional ammunition to accelerate growth,
Yes.
right? As much as growing at a consistent rate over a period of time, sustainable growth, all of that is good. But in today's day and age, if you have an idea, you need to throw money to kind of scale faster.
Yeah. Fail fast. Scale fast,
Scale
fail
fast,
fast.
which bootstrapping will not give you.
Yes. Interesting. Okay. So, we also spoke about having multiple investors on the cap table or doing it through an RUV. So, what exactly is a clean cap table, and when does it get messy?
It gets messy when you have like 50, 60 people on your cap table.
Wow. Okay.
Right? Like,
So, is 10, 12 people okay?
depends on at which stage.
Okay.
After your first round, even 10, 12 is messy.
Yeah.
After series E, of course, you better have 10, 12. So, in the initial stages, when we end up as founders taking checks from just about anyone, and hence cluttering the cap table. Now, what would happen is eventually some investors would use that as an excuse not to invest in you, right? But eventually investors will insist you clean up the cap table.
Right. Yeah.
Right. So, which is why, and again, founders had no option earlier. Today you have options like RUB, etc. So, might as well use those structures. And for investors also, my advice is that. So, I'm also an angel investor.
Okay. Nice.
And I actually tell a lot of angel investors are like, no, we don't want RUV, all of it. But I actually tell them, you know what? It's better for us because when it's not like we are investing some 50 lakhs, 1 crore, all of that. If you're investing 5, 10 lakhs, if you're in a RUV, fine, nobody will have an issue. But if you are on the cap table, if not the next round, the round after that, you will get booted out.
Yeah.
Because the investor would want to clean up the cap table.
Clean up the cap table.
So if you really want to continue in this company for a longer time period, it's also to your advantage to be part of a RUV.
Interesting. That's a very interesting perspective because a lot of times investors say that we don't want to do RUV, there are additional charges to it, they take their own cards, or like why should we give that card, so we don't want to do it. But what they're not probably realizing is that eventually if you want to stay in the long term, nobody's going to let you, so might as well just pay that 1%, 2%, whatever it is, but stay in an RUV. Very interesting. So Anisha, why don't we just list down just talk about key documents that are meant to be made while somebody is raising a fund. So, as per my experience as a shareholder agreement, then you need to have a co-founder agreement if you're having a co-founder, but that's even before the fundraise, I'm
Correct.
guessing.
So, you don't need, a co-founders agreement is a kind of a shareholders agreement.
Okay.
So, look at a co-founders agreement as a shareholders agreement when the only shareholders are the co-founders in the company.
Yeah.
But the minute you have shareholders, other investors come in, the co-founders agreement gets subsumed. So you should not have two separate agreements.
Oh, interesting.
That same shareholders agreement also has the co-founder relationship.
Okay. Yes.
So you're right, shareholders agreement. There's a share subscription agreement. Sometimes it's also combined. So you call it share subscription and shareholders agreement. Employment agreement for founders. Yes. Yeah. Like as much as we are owners, we are also employees, so need that.
Most of us still don't have it.
But that is mandatory. Like when you have a VC coming in, that's the first thing they'll ask for as well. So from fundraising perspective, it is this.
Okay.
And of course, the investors will insist that the shareholders agreement gets incorporated into your articles of association.
Oh, okay.
Yeah. Otherwise, the company is not bound by it. See, a shareholders agreement is an agreement between us. Company doesn't have to be bound by it. Company is only bound by its articles, which is why extremely important to incorporate the shareholders agreement into articles.
Wow, this is not something that I was aware of even till today. Very interesting, but I think early angels don't usually ask
they don't
for
insist.
This.
Yeah.
So maybe that's why we didn't know. So you mentioned there's an SHA, which is a shareholders agreement, and there's an SSA, which is a share subscription agreement.
That's right.
So what is the difference between the two?
So share subscription agreement basically regulates the rules of the investment being made. So the terms on which the investor is going to invest in you. So if there are conditions to be fulfilled by you before the investor gives you money, what are the steps to be taken once you receive the money, okay? And key is representations and warranties. So you give this representations to investors saying, everything is
proper.
Okay, we don't have tax notices, all of that, and against that investor takes indemnity from you, because if you have misrepresented, then the investor needs that protection. So share subscription basically is around that.
Okay.
what is the process to be followed when I'm giving you money, and what are the terms of that.
Understood.
That's it.
Okay.
Shareholders is once that money is in your bank account, what are the rules that will apply, and
Okay.
how you will run the company.
Okay.
So you can't do a bunch of things without, you can do nothing without investors' approval, all of that.
Yeah.
So how the company is managed, run, if you decide to walk away, what happens? That is also key, right?
Yeah.
Or if investors want to fire you, how can they fire you? All of that is in the shareholders agreement.
Interesting. Very interesting. So, like you mentioned a few clauses in the shareholders agreement, what are some 2-3 clauses that people usually ignore? Because I don't know, a lot of times founders just don't want to read these documents. So 2-3 clauses which are super important but often overlooked.
Liquidation preference, right? A lot of time founders actually think anyways, liquidation preference basically, is a clause that dictates how money is distributed if there's a liquidity event. So classic use case, company gets acquired. How will money be utilized? Lot of times what happens is, the mindset is anyways all the money is going to investors, because investors have liquidation preference, not the founder.
We don't have it.
So you are like, let the investors fight amongst themselves. I'm anyways last in the line. But it's critical because imagine if the investor says, I'll take 3x of the investment amount or 4x of the investment amount. You might be last in the line for distribution, but how much is left
You
for
might not
distribution?
even get anything or very less.
Yeah. So that is key. The other is now founders have become very kind of wary of it is things like cause, right? When can investor fire you? And what happens if investor fires you or you walk away? What happens to your shares? So just, sorry, sidebar, but there's this new thing, OTT mein, Royals or something.
Yeah. Somebody wore a Jaey outfit in that show.
Oh, really?
Just putting
Really? Yeah. Okay. But there, she gets a call saying the board has fired you.
Oh, okay.
And I was like, you didn't read the SHA wave. Cause ka definition kya tha? No, you can't just get a call saying the board fired you. But founders have become extremely sensitive because of things like this. They literally think that board can call up and say you're fired. वो नहीं होता.
नहीं हो सकता.
Yeah. So, but that cause definition, default definition, when can investors trigger default? Because if investors trigger default, they can sell your company.
Wow. Okay.
That's key, right? As much as, so going back, like as much as there could be the 0.0001% chance, but agar hua, again, in Royal they showed that.
Okay.
The investors trying to sell the company as well. So
Wow.
then I was like, wow, these are use cases right there. So, yeah.
Interesting, very interesting. But for that, investors do need to have a majority stake, right? Only
Not
then.
necessary.
Okay.
Triggering event of default, triggering right to sell. See, investors, actually speaking, if you notice, till about, again, depending on the valuation of the company, but till about series maybe B, C, D, don't have majority, no? Your first VC will have 10%, 15%. Even then they have that right.
Wow, interesting. That's a lot of right that they're getting in one shot. Okay. So you also mentioned that you're an angel investor, so we're just changing the angle now. And could you tell us what are the 3 red flags and green flags that you see in pitch decks?
In pitch decks.
Yeah.
Okay.
You can talk about pitch decks or the company or the founder. We can be open about that.
I'll be very honest. Given that I don't put very large checks, for me, it has been a couple of things. Of course, the cliched line, you invest in the founder.
Yeah.
Here's the thing. For me, it's as simple as that. If I can't sit and have a 1-hour conversation or a lunch meeting, or like one investor said, if you can't sit through an entire flight with the founder, then don't invest.
You can't do it.
So that is key for me. Second is another, and this is a investor in listed companies who had once given me this gyan. Like when I had asked how to kind of pick which company to invest in, right? Like stock market, I'm still clueless. But what he had said is, think of things you would use on a daily basis. So you got to relate to it.
Yeah.
So for me, hence, if you see, I never invested in crypto, although I advised, not claim to fame that I advise, but I never invested. But the thing is, if I can relate to the product,
Yeah.
correct, that is key. If I can be a user
Yeah.
at some
That,
point
that
of
should
time.
be a definite problem and a proper use
Yeah,
case
yeah.
for it.
To the extent that being a hardcore non-vegetarian, there was these founders I had been working with for almost 4 or 5 years. Loved the founders, but they were doing they were making the ingredients for plant-based meat and all of that.
Okay.
So it's a B2B
Vegan,
business. But all of that, but I couldn't relate to the product. Na hardcore non-vegetarian ho, kaise hoga? I actually became vegan for 6 months.
Okay, interesting.
Yeah, because otherwise I was like, how do I invest?
Yeah.
And I didn't miss non-vegetarian, by the way, interestingly.
Because of their recipes?
No.
Just because in
generally, I
general.
just realized then that after a certain point, probably, all this, now you're reading about mindful eating, I think
Yes.
that becomes key. Anyways, but sorry, coming back. For me, it's about the product. So hence, for me, it has always been, fitness, sustainability, those kind of things. So the problem statement becomes important. But when you look at a pitch deck, from being a lawyer, you would think I'm used to reading lots of things. I don't like cluttered pitch decks. As
Nobody
much
has time, so much time to read so many
just
things.
get to the point,
Yeah.
right? If I open a pitch deck and there's so much coming out, I'm like, forget it, chodo.
So what is, like, get to the point, what are the few points that you want to see in the first shot in a pitch deck?
What's the problem statement? How are you different from the others? Now, please understand, I also find it rather insulting if you say I don't have competitors
Yeah.
or I have limited competitors and you try to hide. And today's day and age, I just Google it and I'll find out, right? So why? But that is key. Like when people say no one has done it, or I come clean with it, correct? So that is there. How much you're raising and valuation. I'll tell you why. Not just because you want a good valuation, but I feel that undervaluation and overvaluation both are dangerous, right?
Yeah.
So even if a founder is undervaluing themselves, I have an issue.
Yeah.
Correct?
They don't have confidence in themselves to begin with.
Then how are you going to sell this?
Yes.
Right? That and the cap table. One is cluttered cap table. Second is if you have gone around like handing out advisory options to everyone, I have an issue.
That's become like a new thing now. Everybody wants to take advisory equity.
Yeah. It's okay, give, but if you're careless with your stock, see, you can't be careless with your money, you can't be careless with your shares. For me, that's important.
Yeah. But I think early founders don't realize that because there is no financial outflow that's happening when I'm giving advisory equity in the beginning. So हमें लग रहा है कि काफी सस्ते में काम हो रहा है, but we're not realizing that it's actually the most expensive thing out there.
Exactly. The number of founders who have called me up and said, Anisha, I had given this advisor 3%,
Oh, wow.
but now I want 2% back. मैंने तब क्यों नहीं सोचा?
Yeah.
So yeah.
Interesting. Very good. So about co-founders and founders we spoke about. So I have two pertinent questions there. One is, what is the right number of co-founders? Is there something called too many or too less?
See, I'll say how much is too much, right? I think definitely more than 3 or 4 is too much.
Okay.
Right? Like, just like how can there be so many owners?
Yeah.
Right? Because then what happens is, even from an employee's perspective, I can't have 10 bosses.
Yes. Yeah.
Correct?
And when there are more than so many humans involved, there are bound to be so many disagreements.
Yeah. And what is it that you're creating that you need like 10 co-founders? Correct? There can't be like. So, yeah, I think 2 to 3 is the sweet spot. 4 tak good. Beyond that, starts getting a little messy.
Yeah. And solo founders?
See, there's nothing wrong against solo founders, but entrepreneurship is a very, very lonely journey already.
Yes.
Right? You can be surrounded by the best mentors,
Yeah.
right? They are still just, you know, audience to your theater, right? You are the ones who are actually living it.
Yes.
So unless you have somebody else in this journey with you, they will not understand the
Yes.
way,
Yeah.
you know, what you're going through.
Yeah. For
So
sure.
there's nothing wrong with solo founders. I've invested in solo founders. But the only reason I would say having at least two co-founders to another co-founder is important is otherwise it gets very difficult.
Yeah, and the burnouts come real fast.
Yeah.
And it comes from a personal experience for me also. So I started, I think about 3 years ago, little more than 3 years, but probably 3 years. And for 3 years, 2.5 years, I did it all alone. And I did every single thing. I did have an amazing team, but you are a founder. You can't just move away from these things, especially when you're early. And I kept looking for co-founders through the journey. I had my heartbreaks. These co-founder heartbreaks are even worse than
Yeah, they
life
are.
relationship
Yeah.
heartbreaks. And like not finding the right person, because you give your energies, you expect so much, and then everything goes down to zero and all of that. So I had like that twice or thrice. And I finally found somebody good 8-9 months ago, and she's still working with us. And oh my god, I've suddenly so happy, honestly, happy is the word, because now I'm not constantly stressed about every single thing. I know that somebody else is taking some stress, so I can take some other stress. I can do this because there is somebody else firefighting there, and finding the right person becomes so important. And just having somebody take half of your stress and workload makes all the difference, because growth only comes when you can do so many things.
Absolutely. So even me, at LexStart, I've been the only partner, right? But last year, we promoted someone, one of our first employees.
Wow, amazing.
We promoted her to partner level, and I saw the difference. Now I hope she doesn't watch this, but all the difficult stuff I send her way, like HR, you handle.
For
right?
sure.
But I saw how life became easier for
Yeah.
me, and this year I took another bet, and now we're bringing in 2 more partners.
Wow, that's
Right.
amazing.
So yes, it's
it does,
important. Like you might have the best team,
Yeah.
but they're still not your partner.
Partners.
So
And the
there's a lot of
investment that a
difference.
partner has in it is totally. Yeah, even I did that. I used to handle all the courier logistics, follow ups, this, that, and now I've passed it on to her. You do it, I'm not doing it. And she happily does it. It's nothing like she doesn't want to do it, so that's okay, great. So, this brings me to my next question again now. Bringing a co-founder early on when you're just starting versus bringing somebody later on, how does it impact from a compliance perspective?
Compliance perspective, the only difficult piece is structuring the ownership. Because what will happen is you'll give them stock options,
Yeah.
or whether you give them stock options or shares, right? There are consequences like tax, etc. So when you bring them much later, the value of the company would have gone up.
Right. And
So
you
just-
would have raised round, there will be
Yeah.
investors in between
Yeah.
who might have a say as well.
Yeah. So because of that, later on is difficult. But I personally believe that getting early on, makes them actually feel also like true
Yes.
co-founders,
Yeah.
right? As opposed to me coming in like 4 years after you've started.
Yeah.
So that's the other thing, by the way. I tell this to founders: don't confuse a key employee or a senior employee and a
Yeah.
co-founder, right?
Yeah.
Because if they are not fully vested, it's a challenge.
Yeah.
It's a challenge from optics perspective, but it's also a challenge because your investors in your shareholders agreement link everything to co-founder exits,
Right.
right? So in fact, I always say that take your time, but be sure that they are co-founder and not key employee. Also, bringing someone early on, the point I was trying to make is bringing someone early on, they're more vested, right? But the disadvantage also is that, when you're starting out, there's no structure.
Yeah.
I mean, there's no structure even 3-4 years later, but when you're starting out, there's no structure at all.
Yeah.
And if somebody is not 100% vested, they may not, like, like it.
Right.
Because they would come from a structured background, right? And I've heard people say this.
Yeah.
Yeah, यहाँ पे तो कुछ भी नहीं है, but I was like, startup है, ऐसे ही होता है, you know. But that is there, and co-founder exits early on when you're already trying to convince the whole world you have a business.
Yeah.
It's a great idea, it will make money, all of that. You're trying to convince your investor, you're trying to convince customers. And at that point of time, if a co-founder exits, it's a bigger
Yeah.
setback. So, I mean, both have the pros and cons.
Yeah, for sure. But how much equity should we share if you're bringing somebody like on day one versus 2 years later? What's an ideal percentage? Or is there any ideal percentage?
I wish I. So, in fact, when we started the Legal Tech, one of the products we thought we should build is a calculator, co-founder equity calculator.
There are so many out there,
Yeah.
they don't make sense to
They
me.
don't make sense. Because when we started putting in all the criteria and all, there is no wrong or right answer. But first thing is, it's important to give meaningful equity. You're giving someone 1%, unless that 1% is worth 100 crores, doesn't make sense. But the challenge also is when you're bringing in someone when you have maybe not fundraised or fundraised like a convertible round, so there's no valuation. How to decide?
Yeah.
Because that whether 10% is too much or too less, you don't know.
You don't know.
Because you don't know what it is
Because
worth.
if it's way too less, then the person might not feel that invested. If it's way too high, then everybody else is going to have a problem, including you.
Yeah. And you're shooting in the dark, right? How much to give? I don't know. So, but it is very important. There's just one criteria that I take as a thumb rule, which is don't just evaluate on the basis of what that person is bringing to the table. It is also that once that person comes in, what is it that they'll do?
Yeah, and how much is going out of your table?
Exactly. So that, but yeah, there's no right or wrong number.
Interesting. So, Anisha, while of course co-founders and having a partner is definitely important, a lot of times it happens that, two friends start the business, they don't know how they're working together, and anyway, otherwise, there are co-founder fallouts that happen. What do you think are the main key reasons that fallouts happen? And if somebody had to prevent it, what are the measures?
So I think one of the critical reasons why any relationship doesn't work is, either change in vision or maybe clash, disagreement of vision and working styles. Right?
Okay.
Like you said, people might be friends, people might be colleagues who start together, but at that point of time, you were not kind of literally reporting to each other.
Right.
As co-founders, we report to each other. So it's important that the working style matches, style of leadership matches, otherwise there's clash. Second is, of course, vision. Right? Third, why co-founders leave, it's not conflict, but it's also sometimes सबके बस की बात नहीं है. Entrepreneurship is tough.
Yes.
Right? Not everyone can do it. And I have seen a lot of times when, it's almost like you're still kind of continuing, but when you see a shareholders agreement, when an investor comes in, you see a shareholders agreement and then you realize, oh my God, I have to sign up to all of this as well. That's literally the straw that breaks the camel's back. So, yeah, I think these are the main reasons why co-founders leave.
Got it. No, again, I want to share a personal experience. I said that I did a lot of co-founder trials and breakups. So there was this one co-founder. Back then, I felt that I needed a co-founder. Sort of desperate situation. So it was like, this guy has good credentials. He's an IT guy. Back then, we had also focused on building a fashion tech business, not really just a fashion business. So it's like, he's a good fit. Let's bring him as a co-founder. He'll handle the tech part. We worked together for a good 6 months, and he left his job, he left his home also because the rent was too high, started living with his friend. He did all of that, and I appreciate every single thing. But then there were so many disagreements. There were so many vision related disagreements to a point that he felt sick. He disappeared for a month. And my website was at a standstill for a month because जो चलती website थी वो उसने बंद कराई थी, saying that I will start a new one in a month. It did not start in 4 months, and then he felt sick. And then when we discussed about it, he literally said that, you know, your D2C business is the only thing that's going to grow is my tech, so you better not talk to me like that. And I was like, I've tolerated enough. I have a vision. I brought you in. You absolutely cannot say that my vision is so bad. And it was a stressful time because business to theek hai. It shakes your confidence completely, right? So I think what I have followed as a practice also, because I was bringing somebody in later on, is that I have these dating periods with them or trial periods or whatever you call it. Here, 6 months, 8 months, I'm going to work with you. I'm going to see that if we're compatible, our visions are compatible, and only then get into it and not just rush into it, because then this is not something that we should take up.
Absolutely. And you know, I think that's the right approach. So a lot of times I actually tell people that rather bring them in as consultant, advisor, employee, kuch bhi. Because it's easier to promote someone to co-founder role, but you can't demote them.
You cannot. Like once you get into it.
Because co-founders have to bring in more than just the expertise of a certain thing, right? Like if you're bringing a tech co-founder, it's not about them being great at tech. Not everybody has leadership capabilities, and a co-founder has to have that.
Yes, for sure. There's a conversation for other time, but literally some tech people have this thing that everything I want to build from scratch. Even if there's a solution out there in the market, I want to build from scratch. So there was this one time where there was a certain problem with a certain software tool that we were using, and I was going to report that problem to that service that, hey, fix it, we're using it. He's like, why are you reporting the problem? So then you are helping them improve their product. Don't report it to them. We will build it. I'm like, no, I am using it because you're going to take years to build it. I'm not going to wait for it, and we don't need to build it. So just another conversation. But yeah, so we spoke about co-founder fallouts and how it happens. So we also spoke about co-founder agreements, if initially, right? That we need to have an agreement in place so that anything happens like this, there you are covered. But my worry is that how much do these agreements really hold? Because if, God forbid, somebody actually violates the agreement, isn't it a bigger challenge to actually fight that agreement, take it to the court and get it sorted? I mean, the time, energy and money that takes, is it practical?
So my team and my fellow lawyers will hate me for this answer, but the fact is that, you know, when the conflict happens, correct? Most of what is stated in the agreement goes out of the window, right? Like, especially the co-founder who wants to leave will challenge everything. Correct? So you might have written A, B, C, D in the document, everything gets renegotiated. I haven't seen, and I've been a lawyer for 21 years now, I haven't seen a co-founder departure being as smooth as saying, hey, you know what? You did this as per the agreement. Now I have all your shares. Give me your shares. Tata, bye-bye. And the co-founder says, okay, here, take my shares. Bye. That never happens. But what an agreement helps with is at least your starting point is not like, hey, you know what? It's not working out. Now leave. And that guy will be like, yeah, but I gave like 2 years, so I should have 50% of shares or something. At least starting point of the conversation is based on the agreement. In the agreement, you might have said, oh, you get to keep 50%. Maybe he'll negotiate and take 70%. But at least you're not starting from scratch.
Yeah. So, you have a base to talk from.
Yeah. So your negotiating capability is stronger.
And how does this whole ESOPs thing works? Because I feel it's very complicated and misunderstood. So if you had to just very simplify it, how do ESOPs really work?
So ESOPs actually, when designed well, are great tool. And in fact, till 2-3 years back, I used to always hear from people, like when you would negotiate salaries, as startups, you would give them more ESOPs because we can't afford the cash, right? And most employees would not give much value to ESOPs. But what has happened in the last couple of years is you've seen people making money out of ESOPs, right? That liquidity has started coming in. So now ESOPs hold a lot of value, and which is why it's important to design it well. It should not be designed in a way where the employee, when they look at it, they're like, "Acha, I will get this after 7 years. Then what's the point? I should get some.
They should have that
liquidity."
enough incentives to also stay
Yeah.
long and get the benefit out of it.
So ESOPs are pretty much now kind of, the processes, everything, even the terms are pretty much set. But today it's not just ESOPs. So you have ESOPs, you have ASOPs, you have MSOPs.
Okay.
We lawyers like to complicate things. Otherwise, how will we remain relevant? But basically, see, ESOPs are for employees. I think that is something now which is pretty much kind of streamlined.
Okay.
But who is not your employee, right? Like people like your advisors, mentors, some investors.
That's ASOPs. Okay.
So you give them like advisory options. Promoters, because those promoters who have diluted too soon, early in their journey, it's a chicken and egg, right? Or investor at Series B, Series C will be like not enough skin in the game. Promoter needs more equity. How do you give promoter equity?
Oh my
So you
God,
also
wow,
have
that's like a
management
full circle.
Yeah.
Interesting.
So management stock options, right? They are structured differently, but today you have a lot of different types. You have influencer stock options also, right?
Okay.
You have lot of kind of types of stock options. Except for ESOPs, everything else is right now up in the air.
Okay.
Like still kind of evolving.
Yeah, but might come to a streamline.
Yeah, over a period of time, right? Again,
Interesting.
or everything, right? Like why are ESOPs today streamlined? Because we have seen the full circle.
Yeah.
So now we know what are the problems also when somebody wants to cash out. So you've seen the full circle, so you're able to now chart out that journey.
So Anisha, I think that's a great conversation around co-founders, but I'm going to still take a step back because I was a solo founder for the longest time. If you had to give one advice to solo founders, what would that be?
I think surround yourself with the following. A strong second level, right? That is key. They might not be your co-founders, but you need that.
Yeah.
That second level team is critical. It can't be co-founder and then all juniors.
Yeah.
Very difficult, correct? Second, surround yourself with a team of confidants or advisors who are founders who everyone should bring a skill to the table that you don't have, including being that shadow co-founder or a phantom co-founder, which is why even me, till I didn't have a partner, I had on speed dial 4 co-founders.
Nice.
Right?
Yeah. Your team is your co-founder.
Yeah. So that's important. It is a lonely journey. It's also okay to, have a therapist. It's okay. It's perfectly fine. You need to vent. You need to have somebody to vent. It can't be your family. Right? So
and invest in a therapist, I'd say. I mean, I know they are expensive, but you don't need to go to them every day.
Exactly.
But when you need them, just go to them. It's for your growth.
Absolutely. You see, we have, as founders, we have to vent. Question is who do. When you have a co-founder, you at least have someone to bounce things off with. When you don't have, it becomes difficult. In fact, a lot of my clients kid that even my portfolio company founders, they joke to me that I'm their shrink. So when they are going through tough times, because the thing is, we work with so many companies, we know everyone's problem statement. See, for you, the problem you're going through, you might think you're the only one in the world going through. But when you speak with somebody who says, wait a minute, this is like the most common problem, this happens, you feel better. That becomes important.
So I think very interesting conversation, Anisha, and I learned so much. Loved is a separate word, but just as a founder myself, we go through so many things, and I just learned so much right now. My last 2 questions to you would be, first, when a founder shows up for a presentation or a pitch to you, a lot of times these days the startup cool culture is you show up in shorts and t-shirts and feel sound cool that you're focusing on the business and all of that, but because we are running a power dressing brand, does presentation really make a difference?
Absolutely. I think for me, it has probably, again, something my first boss and now my mentor had told me this. You can't walk into a meeting where you're asking for something shabby, right? So if somebody is walking into a meeting asking me for money, for example, and they're not well dressed, for me it's like, if you can't take care of yourself, how will you take care of my money? For me, that is very important.
Yeah. So you mentioned that you're also very big on fitness and taking care of yourself. So I think dressing up, showing up, taking care of your body, your health, everything cumulative matters a lot.
Absolutely. Absolutely. And as founders now, we owe it to our team, our investors, our customers, everybody to be, see, dressing up, like you rightly said, dressing up is one part of it, but behind the scenes, there are so many other things that add up to you looking, presentable.
The part, yeah.
So that's key.
So how long have you been in the fitness thing?
I actually started working out when I started LexStart. So
wow, that's 10 plus years.
last 1 month I've let go. But, working out became my stress buster.
Yeah.
Solo founder, that's important, right? You find, and I think as women, I actually am an advocate for me time. Within the team, men, women, doesn't matter. I always tell people, spending time with your family, spending time with friends is not me time. You got to find something that is
just for yourself.
And the gym became my space. So it's been exactly 10 years.
Wow. And I have honestly recently started it 3 months ago, but I completely align with you what you say. Like that 1 hour in the morning, if I don't get that hour in the morning, that day doesn't go that well. And whether I'm on my period, it's crazy. I don't feel a single cramp or stomach ache on my periods when I go for that workout, even if it's painful for that day. वो पूरा दिन is like very sorted. But if I don't go, I am like So it makes a lot of difference, and I've only now, as founders, you somehow don't take care of yourself, and as a woman founder, definitely, because there are just, you are always guilty, and there are so many things, and then you get married and and why. But now that I've started doing that, I will never go back. Like, I know how much impactful that is. So, very inspiring. And this brings me to my last question. I'm sure that a lot of founders who are watching this podcast must be feeling very lost and overwhelmed with the sheer number of problems that they are facing, and we spoke about them. So, what is that one thing that you want them to know through your journey and just about the journey?
I think, it is okay to ask for help. It is okay to say, I am overwhelmed. I need to chat. When I started LexStart, I decided to bootstrap. Which effectively meant I burned through all my savings. And I still remember one day I had just $300 in my bank account.
Oh my God.
And my help didn't show up. So I couldn't carry my dabba to work. So that day the option was either to order food or to save that $300 because I needed to take the cab to go back home. I didn't eat that day.
Oh shit, oh my God.
But I believed in what I was doing, and at that time, luckily I was working in a co-working space, and a few days later, and I felt really crappy about myself, right? You're like, you've reached a point where you have no money to feed yourself. Like, what the hell are you doing? Couple of days later, I was speaking with another founder, and he narrated an incident where, they've fundraised, but founders don't get much salary also, right? You know this better than me. So he narrated a story where, for him, how he feels bad every time because his wife is supporting him, right? But not that it made me feel any better, but when you know that others are also going through similar things, at least you know you're not doing something really wrong. It's okay.
It's a phase.
It's a phase. And some of them will have success stories also. Like that same founder today owns like literally a building.
Wow.
Correct? The thing is that. So, as a founder and especially as a solo founder, it is okay to be vulnerable openly. You don't have to be strong all the time. Of course, we have to be strong for our team because they won't understand it. But that is why I said have a team of confidants who you can actually talk to, who you can actually just call and say, hey, I feel like crap, tell me something nice, inspire me, chalega. But that's important.
It usually concerns people to actually show that vulnerability to somebody, specifically your investors. So I to go bindas and tell my investors I'm not feeling like it these days. So, but the point is that you are showing them a very weak side of you. They've invested in you, they've believed in you, and now you're showing them that, hey, you know what, is it that, are you just showing that you don't have it in you to do it? But like, how to get away with that consciousness? Or
that's a tricky one, but I'll tell you this. I have seen both kinds of investors, right? Like I have seen founders go up to the investors with, like you're having co-founder conflict. Like you wouldn't want to go and tell your investor, right? Like you don't want them to panic. But I have seen founders being able to talk openly to the investors about it. That's a sign you've chosen the right investor. If an investor gets nervous, then that's not the right investor for you, correct? So that's key. My partner Smita told me that, so last month I lost my father.
okay.
Within 2 days I was back at work, but I was
Not mentally
there. And she told me this, but I didn't want to tell clients because I was like, I don't want clients to get nervous about it, that I am not around. And she told me this, that Anisha, you are human first, right? You are allowed to be human. It is okay. It is okay to tell people you're not okay. And I took her advice, and on few clients I did mention, because in context, it's not like picking up the phone and saying you. And they understood. They did not get nervous. They understood. Right? So, like the book says, it's okay to not be okay. It's okay to admit you're vulnerable, because end of the day, we might be bosses, we might be portfolio companies for someone, all these tags are fine, but end of the day, we are human. And for a mature investor, it is important that we are okay.
So it's important for them to understand that this will happen, and if this is happening, it's actually a good thing, because somebody is getting burnt out. They're actually putting way too many efforts to get burnt out to that extent, and they're not taking their business lightly. So very interesting, and a very, very, very important advice for so many people, because I have so many friends through this phase, and that people keep coming to me and saying that I am the only one probably in my batch from XLRI who's starting up, and then they're like, we're impressed by the journey, and I'm like, there are days when I don't feel impressed by myself, and while you all say, but I don't take it because I don't want to believe it. I'm happy, but I just maybe I'm not doing that enough. Maybe it's always that on your mind, right? I'm not doing enough. These days, so after Rashmi came in, I told you, right, I got a little relaxed. Now my biggest problem is, why am I so relaxed? Like, pehle to nahi hoti thi itni relaxed. So why am I relaxed? So there are always self-questions and self-doubts that come.
The day I get done early, or if I have lesser calls, I'm like, oh my god, kya hua? Company band to nahi ho jayegi. Like, why don't I have enough calls? So it's good, because that drives us. We will never get complacent.
And you'll always fight, and you'll never be happy with where you are.
But we also need to learn not to be too hard on ourselves. That's one thing that I learned last year. Again, talking to more and more people and being open about work, stress, all of that. What I learned is that it is good to have this, but you shouldn't overdo it also.
Right, Awesome. This was such an amazing conversation, and honestly, I have so many more questions to ask you, but due to the sheer paucity of time, and we can't have this 3 hour long. So we just have our last section, which is a very quick rapid fire. Just want to quickly know, this is a fun question, so no thinking, just spontaneous answers is what we want. First is Google Sheets or Excel?
Google Sheet.
Wow, I am totally anti. I'm always an Excel person. Coffee or tea?
Coffee.
Okay. Most overused buzzword in startup land?
Hustle.
Nice. The first thing you notice in a founder's email pitch?
UI UX.
Oh,
Has to look nice.
nice. Yeah. I mean, very big on this. I think Karthik knows that really well. One capital, one space, and he's like, I don't take it. Okay. So, first thing that startups overdo in early days.
Fundraising.
Yeah. I think today a lot of people just think that it's a hype and fundraising is a big wow and it gives you that credibility.
Yeah. And not knowing when to stop. So you start fundraising, you want to raise 2 CR, suddenly you're like 5 aa raha hai, 8 aa raha hai, 10 aa raha hai. I'm like, boss,
रुक
but
जाओ.
valuation.
हाँ, कितना दे दोगे?
yeah.
Exactly. So if you weren't doing this, what would you be doing?
Teach. I
Oh,
think I want to do it also.
wow.
I would teach.
Nice. What's your go-to song when you feel low?
When I feel low, calm down.
Nice. Awesome. वो अलग बात है कि when somebody else tells you to calm down when you're not calm, it doesn't work.
Yeah, it doesn't work.
Okay. Awesome. So this brings us to an end to our session, and I loved the conversation. It was so insightful. So many learnings for us, for the viewers. Do you have any last things to say?
No, I think great questions. So, for a change, I didn't feel like I missed making a point because, the questions were so great. And I think, you were doing a great job because stories and journeys need to be shared
Yes.
beyond the usual suspects. So, yeah, so this has been great. Thank you so much for inviting me.
Thank you for giving me your expensive hour. Lawyers का time मिलना इतना
Hey, don't
आसान
worry,
नहीं है.
invoice भेज दूंगी.
Awesome. मत भेजना because I have a small hamper for you. So I hope this.
Thank you so much. Thank
You
you
want
so
to
much.
see what's in it because
Sure.
I hope you like it.
Oh, wow. This is so cool. This is so cool.
So we've tried to capture your life through
Wow,
this doodle. So there's this girl called Soumya. She makes all of these doodles for all our podcasts.
Wow.
So we make sure that
This
we
is
learn.
damn
more
cool.
as
This
well.
is damn cool.
Have we covered everything?
Yeah. Although this I thought मैं जेल नहीं गई हूँ.
It's just one thing
Andamans
that
में
you
गई
were
हूँ.
like,
So
yeah.
it's okay. Oh, lovely.
And this is one of our new launches. So we've started belts as a category as well. These are desk to dine sort of belts. You can like
I actually
jazz
needed one,
up.
by the way.
Really?
Yeah.
So I want photos in it.
yeah, I will send you. Lovely. Thank you so
Awesome.
much.
I hope
Thank
you love
so
it.
much. Yes, absolutely. Absolutely.
Awesome. Yeah. Thank you. It was a lovely conversation.
Thank you.